Okay, and welcome back, students who are taking financial accounting, and we are working on the Chapter 3 exercises, Group B. And in the last video, we had stopped on 34, so let's pick up with 35. Just as an FYI, be sure to if you're watching this video for whatever reason, then definitely go back and watch problem exercise 3-32B, 33B, and 34B. Because there's information in there that I went over I'm not going to cover again as it pertains to moving forward with doing these problems. All right, so 35. Statement of retained earnings preparation. Okay, it says here Williams Industrial began the year with $25,000 of common stock and $19,600 of retained earnings. On September 5th, investors bought $4,000 of additional stock in the business. Okay, on November 22nd, the business purchased land valued at $37,000. The income statement for the year ended December 31st reported a net loss of $2,700. During the fiscal year, the business paid $800 each month in dividends. Right. So it began with $25,000 of common stock, $19,600 of retained earnings. Right. And then there was these transactions. Now it says here, prepare the statement of retained earnings for the year end December 31st. All right, so before we go there, okay, so what are we going to need here? All right, it began the year with $19,600 in retained earnings, because we know on our statement of retained earnings we have beginning retained earnings. We add in our net income, our profit or loss. Then we take out dividends, less dividends, to end up with ending retained earnings, right? So out of these transactions, yeah, we need the $19,600 for the beginning retained earnings. The purchase of additional stock in the business has nothing to do with our statement of retained earnings. Okay, that has to do with our common stock. I mean, we don't need this $25,000 for common stock in order to create the retained earnings. So that's information that has nothing to do with the problem. Buying on September 5th, buying $4,000 in additional stock in the business has nothing to do with being able to calculate our retained earnings. Purchasing of land for $37,000 has nothing to do with creating the retained earnings. But having the profit or loss of $2,700, yes, that has to do with the retained earnings, and the dividends have to do with retained earnings. So remember, you're working through a word problem, and you're going to be given information, and not all of the information, you have information that's directly related to solving what you need. You have information that has nothing to do with the problem, and then you have information that has to be manipulated, right? Well, in this case here, you're given information. Common stock has nothing to do. 19,600 is important because that's directly related. 4,000 has nothing to do for the purchasing of stock. Buying land has nothing to do. And net loss of 2,700 is important. And we have to manipulate this because it's saying it's paid $800 for each month for dividends. So it's not just $800, it's 800 times the 12 months for the dividends. So we have, as a word problem, we have information that has nothing to do with solving the problem, which is these, right? We have information which is directly related to solving the problem, and we have information that has to be manipulated to be able to solve the problem. Okay, so let's create the statement of retained earnings. And again, from a formatting perspective, I'm going to abbreviate because it's only for my eyes. But if you're going to give it to somebody else, make sure it looks like the solution, okay? The heading has to have the period, all right? So it's year ended, shows what the period is, and this is for December 31, 2014. Of course, that's center aligned. Now, and if you watch the theory videos, you saw that I create, like in the last video for 34, I went through a process for creating my income statements. I do the same thing again and again and again, so I know, I ingrain in my mind on how to create the income statement, and I'm only watching out for little variances that occur, and I know what to do. And it's the same thing with here with this statement of retained earnings. I'm going to have a beginning. I put in the heading as my first thing that I do. Then I have beginning retained earnings, and I have to put in that date, which is January 1st, 2014. And then I'm going to add my net income. Well, in this case here, I don't have an adding of net income. I have a net loss, so I have to write less my net loss. And then I have a subtotal. And remember, with the statement of retained earnings so far, we're doing this as a single step. We're not doing multiple step, which has 2 columns to do the math. For the statement of retained earnings, we have a tendency to use that as a single step, meaning we only use 1 column when we do the math straight down the page. Okay, so after we have a net loss and a subtotal, then we have to deal with dividends. So we know we paid out dividends, so less dividends. And then we have an ending retained earnings as of December 31, 2014. It's twice I did that. Okay, so 2014. Right, so our beginning retained earnings we knew was 19,600. Okay, and again, you make sure you put the $sign because it's the first number in the column. Now, we have a net loss, and I'm going to disagree with the way the authors present the solution. Okay, I'm going to write a positive $2,700 here, and the reason why is because my description right here tells me that I'm subtracting the $2,700. Okay, the authors had put this as a negative number. The word less times a negative times a negative means that would be a positive number. Okay, and we're not adding this number in, we're subtracting it in. So personally, I would not include the brackets around the $2,700 because I'm showing that the word less means to subtract the $2,700. Now, if I had gone and had done this instead, if I had said add a net loss, then I would actually write in the 2,700 because why? I'm adding a negative, which would be subtracting. Okay, but that's not the case. He's showing it as, they're showing it as less. So for that, I'm not using the brackets. Okay, but we're doing a mathematical calculation here, and we end up with a subtotal of 16,900. And then just like the dividends, again, don't use the bracket, all right? So 9,600, right? Because we're subtracting out the dividends. Now, the dividends, the solution is showing how the dividends were calculated. It's writing in 800 times 12 months, and there's nothing wrong with writing that in, okay, to show how you arrive at the 9,600. Okay, there's nothing wrong with doing that. But I personally wouldn't do that for the simple reason, this company is showing $800 a month for 12 months, but what if it wasn't $800 spaced evenly over 12 months? What if it was $800 one month, $1,600 the next month, $3,200 the next month, zero for the next month? Okay, it wouldn't be as simple as that. So I have a tendency to not include that description. Okay, and again, because this is the word less, I'm writing that as a positive number, and I don't agree with the solution being showing the brackets, right? of 9,600. And then of course you do the math for that, and that means you have a ending retained earnings of 7,300. Double underline to show that it's the last, it's the end of a calculation, and the dollar sign to show that it is a dollar amount instead of a decimal amount. And that's your statement of retained earnings. Let's go back up here, and it says here, did the retained earnings of the business increase or decrease during the year, and what caused this change? Well, obviously it decreased because it went from 19,600 down to 7,300, and the reason why it decreased was because we had a loss, which decreased the retained earnings, and we also paid out dividends, which decreased the retained earnings. Right. 36B, let's see here. Let me look at this real quick to see if I can do this in this video. It says here, compute the amount of supplies, salary expense, service revenue. We'll report for the year end, solved by making T accounts and posting information to the accounts. Okay, so yeah, I'm going to work through this in this video. And it says the adjusted trial balance, say it's an adjusted trial balance at August 31st of 2014 and August 31st of 2015 include these amounts. So here's 14, here's 15 for these amounts. Analysis of the accounts at August 31st, 2015 reveals these transactions for the past 12 months. Right. So this here is an adjusted trial balance, and these are transactions that occurred in the past 12 months. Purchase of supplies, cash payment of salaries, cash receipts of it in advance for service revenue. All right, it says compute the amount of supplies expense, salary expense, and service revenue. Will report for the year ended August 31st. Right. Solve by making T accounts and posting the information to solve for the unknown accounts. Right. So basically what they're saying here is let's create these three T accounts and have the balances in the accounts. Right. So let's go with supplies here. And it had a beginning balance of 4,000. Right, that's beginning balance in the year 2015. Remember, this here balance is the end of 2014. That ending balance in 2014 becomes the beginning balance for 2015. Right, these numbers for 2015 are ending balances. Right. So when we're creating these here T accounts, this is a beginning balance, and we have an ending balance of this amount, right? So this is the beginning balance, and this here is my ending balance in the account. Beginning balance of 2014, ending balance of beginning balance of 2015, ending balance of 2015. So that supplies. Oops, wrong way. Salary payable is 1,700 and 4,400. So salary payable was 1,700, and it had an ending balance of 4,400. And then unearned service revenue was 17,000 and 19,000. So unearned service revenue was 17,000 and 9,000. How much? 9,900, right? Okay, now it says compute the amount of the supplies expense, salary expense, and service revenue. So we need salary, supplies expense, salary expense, and service revenue. Okay, so what we're doing here, solving making key accounts and posting the information to solve for the unknown amounts. So what we're doing here is we're basically saying, okay, we have to, if we understand the concepts of making adjusting entries for supplies, for salary payable, and for unearned service revenue, we can start with the beginning balance and know what the ending balance is, and we can figure out what the adjusting entry should be, because obviously we're adjusting that particular account, and we're either going to expense or revenue as the opposite side of that transaction. So in order to make the journal entry. So if I had a supplies beginning balance of 4,000 and now I only have 1,500, that means I'm decreasing it. So that means I'd have to credit the supplies account for $2,500. Wait a minute, let me, let's see here. Nope, sorry about that. Okay, that's not right, because I have to take into consideration these transactions. Okay, so during the year, all right, we had a purchase of supplies for 6,500. So we had a purchase of supplies for 6,500. Go the way. We had a cash payment for salaries of 59,800. So we had a cash payment of 59,800, means we paid out our salary payable, the 59,800, and cash receipts in advance for 66,400. So we get cash receipts in advance for 66,400. Okay, so we from this, and just to take a quick step back, right? Let me erase this. Right. We have ending balances for 2014, which become the beginning balances for 2015. And of course, these are ending balances. Okay, so there's a difference between the two, obviously. We also had these transactions that affected these accounts. I mean, this purchase of supplies was part of this ending balance in 2015. The cash payment of salaries, there was a transaction that was recorded, which is a part of the balance of this 4,400. And this here cash receipts in advance for 66,400 is also a part of that balance of 9,900. So when I'm creating the key accounts, I'm showing, the beginning balances of 4,000, 1,700, and 17,000. And then I also have to show whatever transactions occurred, which in this case is the 6,500, 59,008, and the 66,400. And then I have to show, okay, here's what my ending balances were: 1,500, 4,400, and 9,900. But in order to get to those ending balances, we had to make an adjustment. So what's the adjustment? All right. And that's what we're going to record so that we can put that in for, expense and revenue, that proper amount. So because we understand this, now this just simply becomes a matter of, just doing the math. Okay, so I have 4,000 and 6,500, which is 10,500, and I have a balance of 1,500, so I subtract that out, and that gives me an adjustment of $9,000. So since that's a debit of 10,500, and I'm reducing it down to a debit of 1,500, that means I have to credit supplies account for 9,000, and if I credit that, I have to debit supplies expense for 9,000. Right? For salary payable, right? I have a credit of 1,700, and if I subtract 59,800, right, let me do the math here. Minus 59,800, oops, 1,700 minus 59,800. That means I have 58,100 on the debit side, but I need to get to 4,400 on the credit side, right? Because remember, this here's a credit, and this here's a debit, right? And so right now I have a debit of 58,100, but I need to get to 4,400, right? So I have to add that in, plus 4,400. Oops, I'm sorry, 58,100 plus 4,400, which gives me an adjustment of 62,500, right? Because if I subtract that, that gives me the credit here. So I end up with a credit of 62,500 to end up with that debit, right? An easier way of doing it, I mean, that was the thought process, but since all we're doing is just playing with the math, okay, an easier way to do this is to say, okay, I have 1,700 and I have 4,400, which is 6,100, right? If I take the 6,100, okay, so let me think through this just for a second. Okay, no, my thinking went awry there for a moment. So, yeah, end up taking, doing it the other way. I have 1,700, right? And there's a reason why my thinking went awry there, because you can't just add up your two credits and then subtract your debit, okay? And you can't add up your two credits and add your debit, right? You actually have to think through it in the process. So I have 1,700, and in order to, if I made a payment of 59,800, okay, so I have 1,700 minus 59,800 gives me 58,100. Now I have to get to, I mean, think about it on a timeline. I mean, on a number line, right? If this is 0, okay, if I was at 17 here and I cross over to get, I go 59,800 here to end up with 58,100, because why? I have 1,700 from that amount to get to there. Now I want to get back over to this other side, so I have 58,100 to get to 0, and then I have to add in the $4,400 more, right? Which gives me 62,500, right? As my adjustment, all right? So, as I was, when I had said, an easier way of doing this, I started thinking about, oh, well, what if I just add the 17 and the 4,400? But that doesn't work, because why? In my mind, when I'm working through this problem, this here is how I'm thinking about it, okay? Even though I was just doing the math on the page, right? I was thinking along the lines of, okay, here's a timeline, here's 0. And if I'm at 17 here and I make a payment, I take away 1,700 out of the 59,800, which puts me at 58,100 here, right? Because this whole amount is the 59,800, right? And so now I'm at 59,800 right here, and now I need to get to 4,400 on this side. Remember, this is the credit side and this is the debit side, right? So in order to get back to the 4,400, I have to take the 58,100, and then to get the 0, and then to get the 4,400, I'm going to add in the 4,400, which gives me the 62,500. Okay. So that's in my mind, in my mind's eye, that's what I was seeing and thinking when I'm working through this problem. All right, so that's how I got there. And of course, since that's a credit, I debit the salary expense for 62,500. Now, for the service revenue, That's simply, I have 17,000 plus 66.4 since they're both credits, which gives me 73.5, and I have to get to, I'm sorry, 83.4, sorry, geez. I'm at 83,400, and since I have to get back to 9,900, I subtract the 9,900, which then gives me the 73,500. So I have a $73,500 debit, which means I end up crediting the service revenue for 73,500. All right. So it's just simply a matter of, for this problem, knowing, what's my beginning balance. I have to take into consideration my transactions, and I'm given an ending balance, and I back into my adjusting entries by doing the math. Okay. Now you might wonder, why would I, this is an exercise problem. Why would I do this? The thought occurred to me that when you're doing accounting work, depending upon the situation, there's a lot of times where you have to back into the information. Okay, that's what we're doing, is we're backing into this adjusting entry. We're backing into, figuring out what that amount is. And that's a skill set that you develop. And that you can use. It isn't like doing math where you're doing steps 1, 2, 3, 4, and you just go down in this order. There's times where you're missing this piece of information, let's say 5, 6, and 7, or you might be missing this piece of information, and you have to be able to figure that out. It's like putting a puzzle together. So it's not just simply with accounting. It's not simply just going down in an order. Sometimes you have to take the information that you have and work backwards and forward in order to be able to arrive at what you need. Okay, it's not, people think accounting is about math, and it isn't. Yeah, you add, subtract, multiply, and divide, but that's not what accounting is about. Accounting is, thinking critically about the problem and having to be able to figure it out. All right, so that's just a little bit of an FYI. All right. So with that said, that's the end of that problem. If you don't understand something, watch the theory videos, and feel free to contact an instructor.